Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I am your host, Ashutosh Garg, and today I'm delighted to welcome a very, very accomplished professional from Singapore, Dr. Yong Hsin Ning. Hsin Ning, welcome to the show.
Thank you. It's my privilege and honor.
Thank you. Dr. Yong is the founding partner of the Biz Lab. She's an adjunct faculty member of the Singapore Management University, and she has an interesting podcast show, which is called the Square Apple Podcast Show. So, Hsin Ning, let's start with talking about the Biz Lab. Tell me a little bit about the venture and your motivation to start it.
Okay, so the Biz Lab is helping early stage startups prepare to raise funding. So what specifically we look at is we look at whether their numbers match up with the growth story that they are trying to tell. So I'm sure you have been to pitch competitions. You know that it's quite easy for startups to tell a very rosy picture. The question is, when you open the hood, does the numbers actually match up with the story that they're telling?
Correct.
So specifically, we look at their numbers, how it aligns with their story, and the gaps and opportunities to improve the investability. So that's how we support startups.
And when a startup entrepreneur comes to you or a founder comes to you, what are some of the things that you look for before you decide to give him support?
So in general, we work through accelerators to deliver our services. But in general, we feel that we want to work with startup founders that has a little bit of traction already. Because as a very established entrepreneur, you know, right, projections are just estimates.
Correct.
So if you don't really have traction, it's really difficult to ascertain the basis of which you are projecting your numbers. So for us, we would like to work with typically founders who already have some traction and are looking to grow and scale their business.
Very interesting. So based on all the work that you do with so many startup entrepreneurs and founders, what, in your opinion, are some of the important qualities a startup entrepreneur should have?
Okay, so I think there are two. The first is tenacity, because entrepreneurship is essentially trying to create a path in a thick jungle where nobody has created before. So definitely there will be a lot of uncertainties and ambiguities and so-called failures. So tenacity is definitely one major thing to have. I think the second thing to have is the ability to challenge yourself. Right? So a lot of times founders suffer from overconfidence bias and confirmation bias. So market is really going to love whatever I have. But 100% of the time, it's not the case.
Correct.
And there needs to be pivots that the founder needs to make. And the founder really needs to have the ability to stand apart from the idea and think critically about how else can they shape their business model, every element of it. And it is an iterative process. So really the ability to think critically and to really challenge your own assumptions.
Very interesting. Very interesting. And do you find a lot of founders are willing to challenge their assumptions and pivot easily?
To me, I think the short answer is no, but the longer answer is it can be taught.
Can be taught. Very interesting. Very interesting. My next question to you is, it's often said that only 1 in 10 startups make it. And I'm sure you must have been through hundreds or maybe thousands of business plans. What, based on your experience, are the top 3 reasons why startups don't make it?
So I think the first reason is the inability to break down big ideas, right? So there's this very cliche line called think big, start small, scale fast. It cliche as it may sound, but it's very real. So every time in pitch decks, we will see very big visions. But when it comes down to implementation, I think startups may have challenges trying to break it down into a way that mitigates their risks and test key assumptions. So take technology platforms, for example. I mean, at one point in time, platform ideas were all the rage, right?
Correct.
And a lot of times, and platform ideas actually has been proven to be very difficult to take off because there are two sides of the equation. And a lot of times, the inexperienced startup founders will try to start to build a technology platform first, which actually is a mistake, because actually the whole business idea behind that platform hasn't yet been tested. And it is therefore a very big risk to start building and investing in technology. So coming back to that first point is, how do you then break the vision down into smaller bite size so that you can mitigate your risks as you go along? I think the second and maybe related reason to this, the failure, is around not knowing your numbers. I know a lot of people don't feel that they are numbers people, and therefore they shy away from it. But actually, it's not so much about the numbers per se, but actually the thought process that you go through to challenge your assumptions and to ascertain whether your business model is robust or not. And being, coming to terms with the fact that actually there's not only one way of delivering the business model, but there are multiple ways. So I think it's that maybe that lack of, not thinking through the numbers, and in the end, just pursuing the business idea without having commercial viability in mind. And I think the third, and also maybe related to 1 and 2, is understanding of risks. So if you suffer from overconfidence bias as well as confirmation bias, then you think your idea will work, but you ignore the possible risks. So for example, what about if your revenue dips by 50% or your cost is increased by 50%? I mean, what happens? Because if you become aware of these, then you will take action that will minimize the risk happening to you or have mitigating measures. So I think in summary, it's about inability to break down the big picture. Secondly is not understanding what drives commercial viability. And the third is not having clarity of what are the risks and therefore what are the mitigating measures.
Fascinating. In the old days when I was growing up, this thing used to be called the what if exercise. That used to be, I don't see too many people doing it these days.
Yeah, exactly. I think it's also because, what if seems very scary because there is no boundary. So when we work with startups, we actually define a boundary in which to do the what if analysis so that it's actually clearer.
Very interesting. The next question to you is that, there is always this big debate on when should a startup start to scale up. Everyone's now talking global. Everyone's now talking, pan the whole country. And I've often told people in India, for example, and we are such a large population, I said, if you look at just the national capital region, which is Delhi, there's a population of 24 million people. So it has to just be pan national capital region, and you've got as much as Australia with you. But everyone wants to go pan India. So I'd love to get your perspective on when should a startup start to scale up.
Okay, I believe the startup needs to begin with the end in mind.
Correct.
So at the point in time where they start their first step, they need to have clarity of the answer to that question you just asked. Because this, to me, if the startup intends to scale and grow and go places, every step of the way needs to be intentional. So for example, the choice of the beachhead segment the way that you go to market, even at the early stages, you need it to be intentional so that it builds up upon itself, leading to the goal. But of course, with everything, it's all an experiment, right? Because it will never go as what you intend.
Yeah.
But having a clear vision of where do you want to go? Do you want it to be geographically bounded to a certain place, and therefore you want to go niche, more depth, or you want to go broader?
Yeah.
I think all these are decisions which the founder needs to go through in their head right at the planning phase. And it will take a while for the to get the configurations right. And you also need to have some clarity of what are the KPIs you want to be hitting before you feel that, hey, it's time for me to scale and grow. So to me, it's not like, oh, I'll just like travel happily down the road and then suddenly one day I'll know when. It is something that it needs to be thought through upfront, because it will dictate the actions that you take.
Very interesting. And before I get to the next set of questions, for a lot of the things that you've spoken about, how does Biz Lab support the entrepreneur?
So the outcome that Biz Lab wants to get at for the entrepreneurs is to increase their success to get funding.
Okay.
How we do that is that we deliver the services via accelerators, and then we will work with the startups in the accelerators. We scaffold the whole process in 3 major steps. So the first step is that we introduce digital learning content to the founders and teach them the cash flow 101, cash flow hockey stick. How does all the elements in business model actually drives commercial viability? And we also get them to understand how we structure our quick look tool, which is our proprietary tool that we use. So that's about like 2 weeks. So some people do the work, some people don't do the work, but that's fine. The second step is that then they will all go into a group training where we recap the ideas that we talked about in the e-learning, and we scaffold new ideas. Like, what do investors want to see in pictures in terms of the numbers?
Correct.
And then there is peer-to-peer learning. So that's the second stage, and that then scaffolds them to the consultation bit, whereby there are 2 scenarios. One is we actually take their numbers, their spreadsheet, sometimes a lot of spreadsheets with multiple ways of presentation, and we pump it into our tool. So our tool allows them to very clearly see how their projections actually manifest in investor valuation. I mean, they can say a lot of things, right? But ultimately, when they want to raise funds from investors want to see what's the returns for them.
Correct.
And our tool allows it to be seen very clearly. What our tool also shows them is actually the what if analysis that we talked about just now.
Right.
So we have built in sensitivity analysis, like revenue minus 50, plus 50, cost plus 50, minus 50, etc. So that they can see actually when we stress test their business model, what does it look like? And we also have strategic ratio. So as an outcome of these consultation and advisory, they are very clear about the investability as well as commercial viability. Then as a final step, I mean, these are 3 steps, but as a very final step, because everyone's data is actually in a standardized database.
Okay.
So we can also put in risk weightage. So for example, one that has a more record of traction will have a lower risk weighting. One that has got very little traction then will have a higher risk weighting.
Okay.
And this will help the accelerator sponsors do investor matching between the startup and the investor. So, I mean, because these are all very deliberate, and it allows for, data that is presented in different format, meaning different things, to be digested in a very structured form. And, this will facilitate us to also ascertain the progress of the startups over a period of the time that they are with the accelerators.
Fascinating. What a great response. Thank you. And, that your response gives me an interesting segue to my next question, because you're talking about money. There is a million-dollar question. Should a startup entrepreneur bootstrap as long as possible, or should they raise money whenever it's available? I'd love to get your thoughts on it.
So a lot of the startup founders come to us and they say they want to raise money.
Okay.
Whether do they really need to raise money or not is a separate question, because I think a lot of people are influenced by media. You know, when you go into LinkedIn or on the newspaper, there are like VCs and venture builders and whatever, right? So people naturally think that the only sources of funds is institutional investors, angels, and stuff like that. So for us, we actually take a little bit of a more, okay, I wouldn't say scientific approach, but more structured approach to advising. So when we look at their numbers, we look at, hey, actually, what's your maximum exposure? Actually, if the maximum exposure is not very huge, then we ask whether is raising funds with institutional investor, giving away equity, something that's sound to do. Or do you want to raise or borrow money, for example? So this is a conversation that we always see the light bulb coming on.
Absolutely.
With the startup, because they never really thought about borrowing money instead of equity, because it may seem like it's something quite fancy to it's a badge of honor, I raise money. So we also talked about the implications of raising equity, because it's like a marriage, right? Because you are going into a longer term partnership, and it's not just about the money. It needs to be partners that can further your aspiration for your company. So we take a quite a holistic view about this when we speak to our startups.
Fascinating. So the next question is on failure. You know, the part of the world that you and I come from, I've often said that we are never told it's okay to fail. And yet, when you look at the Western world or the Bay Area, a failure is something that is celebrated based on the learnings the failure has given to you. As the founder of Biz Lab, I'd love to understand, what are your perspectives on failure and the need to tell startup entrepreneurs it's okay to fail?
Yeah, actually, that's a really good question, and it really got me thinking when I saw that question. So I think the first thing is to remove the negative connotation of failure.
Correct.
Right. So I mean, there's this quote that says failure is just finding another way to do things right.
Correct.
So I think that notion that actually entrepreneurship in itself, as I said, the path is not there. You have to beat out the path yourself, is naturally filled with trial and error. So failure is almost inevitable. It is inevitable. So I think it's removing that negative connotation. I think the second thing is to maybe equip founders better in how to fail. So I remember my daughter, when she was learning gymnastics, when she was very young, one of the things that they taught is how to fall properly so that she's safe.
Correct.
So I think that founders can learn. I mean, either they learn themselves or they are taught. How do they mitigate failure? Especially at the early stage where the stakes are not very high, right? It's actually thinking about how do you identify the risks and what do you do to mitigate the risks in terms of your investment in technology, in terms of your beachhead segment, etc. So, and also maybe in terms of how do you set a threshold on the investments that you are making in certain parts of your so-called lean experimentation. So I think it's the second part is really learning how to fail in a safer manner.
I love your example of gymnastics on how to fall so that you don't hurt yourself. That's such a powerful statement. Thank you. Let me now move to your podcast. I've got time for two more questions. So you got a podcast which is the Square Apple podcast. Tell me about your podcast.
Okay, so the Square Apple podcast is a 56 episode podcast, which I recorded in 2019 to 2020. And the reason why it's called Square Apple, right, is because it is about thinking out of the norm, having different perspective. And the reason why I recorded this was because I transitioned from corporate for more than 20 years into being a PhD student and then being an entrepreneur. And I learned a lot of things in that process, how to see things in a different perspective, how to break through in my thinking, how to, basically overcome my fear of change. And understanding how people change is my passion. So I wanted to kind of communicate this to people out there like me who want to change, but maybe held hostage by certain mental or psychological constraints. And all the podcast is around my experiences in managing change for very large companies over my 15 years in Accenture. It is also how I went through my early stage entrepreneurship journey, thinking about things differently and breaking constraints. So I wanted to bring across all these to people going through similar journey as me.
Oh, wonderful. I must check out your podcast show and listen to some of your episodes, because I'm sure there is a lot of learning, and I'm going to ask all my viewers and listeners to check out the Square Apple podcast show as well.
Thank you.
And sending my last question to you, and this is for the many, many people who will listen to our conversation. What would you say, based on your amazing journey from the corporate world to an entrepreneur, what would you say are 3 lessons you would want our viewers and listeners to take away from our conversation?
I think the 3 lessons is maybe firstly, know your numbers. Don't be afraid of numbers. To me, it's about, so I have an accountancy background, but for many, many years, I shied away from numbers, maybe because of my experience in the faculty of accountancy. But I realized that actually, if you set a structure, it will then drive insights, and insights will drive action. So don't be afraid as an entrepreneur to know your numbers. I think secondly, it's know your risks, and recognize that these are inherent in the business. You can't run away. You can only plan for it.
Correct.
I think the last one is begin with the end vision in mind. Think big, start small, scale fast, so that you can be intentional in everything you do. But nothing is going to go exactly the way you want, but at least the North Star is very clear, and it's going to guide you in being intentional in your journey.
Wonderful, wonderful. And on that note, and your 3 amazing lessons, know your numbers, don't be afraid, know your risks, and keep the end vision in mind. Thank you, Hsin Ning, for talking to me. Thank you for talking to me about the Biz Lab, about your amazing journey, about all the stuff that you are doing to support so many different startup entrepreneurs. I mean, I'm sure for the startup community in Singapore, you're like a little beacon that's providing them the direction and advice. Thank you also for speaking to me about your podcast. Good luck to you, and thank you again.
Thank you so much. It's really my privilege, and I really look forward to seeing you in person. And today you hear my story, but I would really love to hear more about your story.
Anytime. Happy to do that. Thank you. Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the brand called you.